We're live.
We are live. All right, so we are here discussing the Steve Carpenter Cake Financial case study. And guys, I want to start off kind of just summarizing what the, okay, I don't want to summarize it, but I want somebody to summarize what this case study is about so we can make sure we're all on the same page. So,
I can do a quick summary if you want.
Yeah, let's hear it.
All right, so here's my situation summary. Cake Financial was created by Stephen Carpenter.
Pause.
Sorry. You okay?
We're good. I am just going to start a timer so that I know exactly where everything starts at.
Oh, okay. Well, we'll hold up that piece of paper like we talked about.
Yes. I think somebody have a colored, I have a highlighter. Or a handbook.
There you go.
Okay, we're live.
Oh, Michelle's got us covered.
Awesome. Okay, let's hear it.
All right, ready for the summary again?
Yeah.
All right, so Cake Financial was created by Stephen Carpenter to change the way people invest. He started Cake Financial in 2006 with the idea of creating a social media platform for investing. Subscribers could link their investment information from the top companies, have it evaluated and receive recommendations, and also track investments of friends, family, and top-performing investors. Unfortunately, Steve had to sell Cake Financial in January 2010. His original idea and assumptions did not completely work out, and by the time they tried to make changes, they weren't able to create a sustainable business. Steve is reflecting on the experience while working on his next business plan, realizing that he learned a lot from the failure and will do things differently going forward.
All right. That's perfect. You must have just read your situation there.
Yep.
Well, you come prepared. All right, so
with this case,
I am going to read off of there's like two different places you can read questions.
Yeah.
I'm going to go off of the case discussion one. Many of our discussions center on understanding success or making crucial decisions. Today, we are trying to account for failure. To begin your group discussion, blah, blah, blah. Quickly reconstruct the key elements of Cake Financial's business model. So, customer value proposition, go-to market plan, technology and operations strategy, and cash flow formula. Does anyone want to take a whack at that?
It's a lot of questions.
Yeah. What do you think his customer value proposition was?
Well, one of his goals was to share people's data so that the personal investor would benefit from that knowledge.
Mm-hmm. Let's see, what was the note I had? So yeah, there's three things he wanted to do. I can't read my handwriting, guys. We'll ignore that because I can't read my handwriting. Told you it was a little chaotic today. Let's see. Anybody else have any thoughts on that set of the key elements?
I think you were talking about three things, and kind of the three things I pulled out was tracking their investment information, having it evaluated and receiving recommendations on it, and then tracking investments of friends and family members.
Yeah. Okay, yeah.
It's kind of what he went into it thinking that he would be doing.
Oh, I know what it's written. He had three things he wanted to do. He wanted to bring in ad revenue, bring in money with ad revenue, premium services, and then data licensing. And I don't know why I had that written right there. So, all right, shall we? That was kind of his, market plan, I guess.
Mm-hmm.
It's cash flow.
Yeah.
All right, let's take a vote. Was Cake doomed from the beginning, or was this a promising business model? Who thinks Cake was doomed right from the beginning?
I don't think it was doomed. I think he just needed to get feedback and tweak it and pivot, like some of the other companies we've studied have done. So I don't think the whole thing was doomed. I think it went about the wrong way.
I personally think he had a great idea. I think he just got off track from what his business model was. He kind of had a plan, and then I think he pivoted in the wrong direction. He let things kind of force a decision out of him.
I think he got distracted sometimes too. He would put all of his focus on one thing, and he'd forget about the other parts of his company. Yeah. And I don't think he did it on purpose. I think that was just his personality, because it seemed to be a pattern he had.
Yeah,
yeah, that's a good point.
And I think as an entrepreneur, he saw where things were successful, so that's where you want to be, so that you feel good about your company. You don't really want to work with your failures, because then you don't think you're doing really well. Mm-hmm. And it wasn't that they were failures, it's just they weren't thriving as much as other parts of or areas, is what I got out of it.
Yeah, I would say
so
it wasn't.
I was just saying my vote is with Becky. I don't think it was doomed. I think it was promising. Go ahead, Mike.
What was the last thing you said? You think it was what? Complicated?
I think it was a promising.
Oh, promising. Yeah, I don't think it was doomed. I mean, it was a good idea. He failed to really get a market match, or well, he failed in a lot of places, but I think it was just too many problems along the way.
Mm-hmm. I think he had totally an unfair, not unfair because everybody had to deal with it, but something that he could have never seen coming was, with the market crash, and in 2008, that kind of really hurt. That really hurt, where he didn't, have any warning at all. Well, you do, but let's see, where are we at now?
I kind of think one of the biggest problems he had is that he didn't really think about a revenue stream. Right?
Yeah, I don't think he thought about that early enough.
Yeah, he started the service, he put it out there, and they weren't making any money for a long time. And
oh yeah,
like the piece we talked about last week, the Dropbox, they started as a freemium. If he had started that way from the beginning and started bringing in a little revenue, right? It just seems so weird to me that he went so long with absolutely no revenue.
I think a lot of his problem with that was that he didn't have a product, even, what do they call it? Like a wireframe product early enough or whatever. When he was just talking to people, he didn't have a product to show people and say, even if it was just a very minimal, version of what he was trying to do to show people and talk to people about it. He just went out and talked to people.
And then he did that competition where he couldn't release anything until that date, and it had to be a product. So, yeah, I mean, he did the big.
Go ahead.
No, I think you're right. He did the big overview. What do you think of this? But didn't give him any examples. And then when he could have gone to the next step, instead he did this competition that prevented him from being able to do that.
Right, and I think that's where he honestly kind of pivoted in the incorrect direction, in my opinion, is that because he did that, it made it so he couldn't get that beta program out there and kind of do a initial test to see, get customer feedback early enough, and he wasn't able to test, his website and find out that it was not exactly what he wanted to happen. It was what terms did they use? It was just harder to use or whatever.
Not user friendly.
So
well, didn't he also say that one of his mistakes, I hope I'm not confusing these one of his mistakes was that he shouldn't have gone for the whole ball of wax from the beginning, that he should have developed an app.
Yeah.
A smaller app.
Yeah, I think that's what he said. So let's see. Let me figure out where I was here. Sorry, guys. Apparently, I'm slightly unorganized. Let's see. On page 3, Stephen says, in retrospect, I'm not sure that these early focus groups were very helpful. They validated our high-level concept, but we did not seek feedback on a specific product. I've learned that focus groups for technical products can be unreliable because people can't always say what they want until they can actually see it and play around with it. We would have learned more by building a lightweight product, which was what you were just talking about, Mike, and watching how investors used it. We also didn't get much sense of our user segmentation from our early focus groups. Later, we learned that there are important but subtle differences between active investors who track their portfolios daily and mainstream investors who pay less attention. There was no question there.
But that sums up what we were talking about.
Yeah.
I've read all this, I promise.
But he, I forgot what I was going to say. But yeah, I mean, his, you know, like I keep going back to B383, you know, where you're supposed to get out of the building and do some field research and get some feedback.
Mm-hmm.
And, you know, I mean, it came down, I think, at the end where, didn't he say that it was, did he lose that competition with Mint or something?
Yeah. Yep.
Yeah.
One that he lost. Yeah.
Okay. Yeah, he lost that competition with Mint, and Mint went on to be very attractive to women, whereas his project or product was attractive more to men. Mm-hmm. And he didn't realize that men did not want to share their data. I mean, that could have been found out so early.
Mm-hmm.
Yeah, with the beta test, exactly.
Yeah.
I think that, you know, his thoughts with that TechCrunch 40, or did I get that right?
Yeah.
Was you know, it'd get his publicity out there, it'd get his name out there, and then even losing it, he was still able to get his name out there. But was that really? He was gambling at, you know, it was gambling his chances with a beta over, you know, winning Crunch. Was that really worth it to him to throw away his beta portion?
I think he lost more than he gained from that.
I agree.
But it goes back to, I think, his personality. He continued to focus only on things that were successful, and he tried to just build that, hoping that everything else would fall into place, and it never did.
Yeah.
Yeah.
Just I think he was missing the big picture in the end.
Mm-hmm. On page 10, there's not necessarily a question here, but on page 10, Stephen says there's no way you could have learned this up front through interviews and focus groups. There were a lot of precedents pointing to a strong social component, including investment clubs and active communities on sites like Raging Bull. Can we come up with a list of ways Stephen's approach is different from Rent the Runway, Dropbox, and Mint? How do you know which assumptions to test first?
Well, I think it's from Rent the Runway, right? Rent the Runway, they pivoted all over the place. They had market studies. They talked with the designers, right? So they did so much research beforehand.
And they had a product.
Yeah, exactly. They had something for people to try.
I think they had a little bit more organization. And they, you know, they weren't focusing on just one individual. Like you said, was it you, Becky, saying, you know, they weren't focusing in on one part of the business. They were able to see more things at a time than just one, right?
I think Michelle was saying that, but yeah.
I knew it was one of you. I knew it wasn't Mike.
I'm sorry, what did I get called on?
No. Yes, answer the question, Mike.
Well, I was trying to find where this was on page 10.
It's the third to the last paragraph.
I found it, yeah. But so what was he talking about? I mean, what was, I guess, what did he say that focus groups would not have helped?
He says they wouldn't have uncovered the user's lack of interest in social networking features. I think they would have. I think that if he had done focus groups with an actual product, you know,
Right.
a smaller version,
Well,
I think he could
I agree.
have out.
Oh, okay.
I mean, he doesn't think he could have, but that's what he's saying. It's like he's discounting the purpose of user groups. Like he's thinking that they wouldn't really have given him the feedback he would need.
Well, do you not think when you're in a focus group that, well, I really don't care what so-and-so thinks. You're not going to, you know, disclose that, or are you just going to hide that?
Yeah.
I don't know. I thought focus groups were honest.
Yeah.
So let's see. Where was I? How do you know which assumptions to test first?
Well, let's see. I think you test the value proposition. In other words, if you come up with the value proposition, that's what you're out in the field trying to test.
You start talking to people.
Make sure that it's going to give them value.
Yep. Make sure there's demand on it. Is there, you know, is there a demand for this out there?
Right now, and another big thought. Oh, I'm sorry. Go ahead.
I just said I don't think there was that high enough demand. He didn't have enough. He just, I mean, he created buzz here and there, but there was other companies out there that already kind of had done it. He didn't find what made him different.
Yeah. So
I'm looking back at my canvas. Where is it? I'll have to look at this. But if you want an order, I mean, like I said, I think you should start with the value proposition. And then, I mean, wouldn't you go into the customer segments?
Mm-hmm.
Right?
Yeah.
I mean, I'm trying to be, because I remember one other problem that he had was that he didn't control the data. That he had to, it was kind of released into his domain, I guess by the users, right? It had to be authorized or something by the users. And they said that the firms were not easily willing to relinquish their data.
Mm-hmm.
So, I mean, that would be go under like channels, but I just don't know if that's, you know, 4th, 5th, or 6th.
Yeah.
Mm-hmm.
You know, so he didn't have his channels worked out. He really didn't have his customer segments worked out. And then I forget who mentioned revenue streams, but
yeah,
that was absent, right?
Mm-hmm. Yeah, that definitely was. That, I think, should have been tested a lot earlier.
Mm-hmm. I also thought it was interesting. He hired a lot of experts, which in some cases could be good. But I feel like in this case it backfired on them because the experts all had specific ideas of what they wanted to do. And they were very expensive to keep on the payroll and pay. And so then when he had that meeting with them and said, hey, I think we need to make some changes, nobody really wanted to because they had their set ideas. So I think that really hurt him too.
Ooh, that's like vested interests, huh? Did everyone have their little, I mean, their little, what's that? Their little kingdom type of thing, or what?
That's what it sounded like to me.
Yeah.
Mm-hmm. So was building the data layer first the right approach?
No.
I don't think so either. What would you have done first?
I like Mike's idea. He's got to make sure he's got a good value proposition, right? He's got to get out there and talk to people and make sure it's something that there's a market for before he starts building anything. And then just build something small for people to test before you go to all the trouble to build such a huge data portion on the back end.
Mm-hmm. Yeah, they spent a lot of time trying to get that correct, that I think that really put a halt on them being able to make money and why they had to quit so soon.
Mm-hmm.
What's your kitty's name?
His name is Louis, and he feels sorely neglected, so I'm sorry, but he's joining us tonight.
That's okay. I like cats. He can be part of our group. Okay. What are the main reasons behind Cake's failure?
Well, we mentioned some of them.
Yeah, we've talked about a lot of them.
On page 3, in the first paragraph, it says that he anticipated that the financial institutions would develop stock prices, indices, and mutual funds based on the stocks selected by top-performing Cake investors. That was a big assumption.
What page were you on, sorry?
3.
Oh.
I think that was one of his failures right there. Is he assumed that they would be such a big business that everything would be based on that, and it didn't work.
Where did he come up with these hard numbers he had?
I don't know.
Which numbers?
Well, like
New projections that were way off?
yeah, pretty much that he'd be such a big company. Projected $82 million of revenue by year 3, with 20%, 21% from advertising.
I think he just in his head realized that if he could get those from other companies that spent that money on advertising. What didn't I say that in the beginning too? That's where he was hoping to earn most of his money. Yeah, he said
maybe
1.6.
It says the business he envisioned would generate revenues by tapping into the $20 billion spent annually by U.S. consumers on investment advice, $1.6 billion spent on advertising, and $1.1 billion spent on subscriptions related to investment information. So they were just, once again, they were just assumptions. He dreamed big.
Mm-hmm.
Yeah, really big.
Yeah.
Was the failure just beyond Stephen's control?
No. There are lots of different things we've talked about that he could have done earlier that would have prevented it from failing.
Mm-hmm.
He kept trying to raise money from investors.
I think he's focusing too much on that than, trying to make a revenue.
Yeah.
Mike, what are your thoughts?
Well, and then he spent time raising money, and then he didn't raise enough, and he took the money anyway.
Mm-hmm.
I think it was 2.8 million or something that he said he probably shouldn't have taken it because he knew he couldn't finish the job. Well, that's not, if he knew that he couldn't finish the job with that, then you need to make a new plan right then and there, not jump into it and then end up failing because when like you said, the economy crashed too. So, he went looking for money a third time, I guess, and wasn't there. So
I'm surprised he got as much money as he did with all the times he went out and asked him. They had to have seen that he'd already been given money and that he wasn't bringing in revenue. So I don't know. I'm surprised he got as much as he did.
I think they just saw the idea as being, a good idea, but they should have. I agree. I'm surprised he got so much, but I think they just saw that it was, it was a promising idea. He just might not have been going about it in the right direction. They were hoping that he'd eventually land.
Mm-hmm.
Yeah. And I think it was kind of the investment strategy, if you want to call it that. I remember before the .com, I think it was in the 90s, the .com crash. You guys might have been in high school, I'm not sure. But, Amazon.
2001, I think.
Amazon was showing zero or negative cash flow for nearly a decade, I think, if I remember correctly. It was just like this, how come people are still pumping money into this? But look at them now.
Mm-hmm.
And I think that was just the mentality that, it's going to turn, type thing. And, maybe he got kind of stuck into that, and his investors kind of got stuck into that.
That's a good point. Technology, sometimes you do have to wait it out. Sometimes it goes so fast you can't keep up with it, and other times it goes at such a pace that you have to be patient to watch. And I think he was in that second phase.
Hmm.
All right. So what low-cost experiment could Stephen have done to test the assumptions behind the main reason for failure?
Read that again.
What low-cost experiment could Stephen have done to test the assumptions behind the main reason for failure?
Oh, that's the last question.
On this page,
Yeah. Okay. What low-cost experiment? Okay.
I think that's like what you were talking about earlier, Mike, where he builds a low cost, just a lower version of it, right? Like we talked about the beta product.
Right.
And let users test the beta product and get that feedback before he really spent all the time building the data behind it.
well, could he have used that? What was it? That program that he opted not to use because he wanted to go out on his own and do his own thing. What was it called?
Which one was that?
Where is
He
it?
wanted to do what? He wanted to be able to call it proprietary or something?
No, well, at the beginning, he had the opportunity to use another program to bring in the numbers or whatever. I can't think of.
Oh, I think I remember what you're talking about. Yodlee.
Yeah, thank you.
Data from third parties such as Yodlee or Yodlee or however you say it.
Yeah, so could that have been an opportunity for him to be able to, test things using them for a shorter period of time like others have?
What were they going to do for him?
It's on page 4. Oh, I just lost them. It says transaction data from 8,000 financial institutions and online billers. Yodlee was founded in 2000, licenses data to 100 banks that use the data to provide account aggregation services to their customers. He dismissed it because they only provided 3 months of historical data, and he wanted a lot longer data than that.
Mm.
But I think that could have been a good test for his program.
Yeah.
Starting with that.
First.
I
Yeah.
mean, even if he only tested, used this for a short period to start bringing in revenue while he built his program and got, with the brokerages and whatever.
Yeah.
No, that's
Well,
yeah.
farther in the paragraph too, he said that Yodlee's not cheap,
Mm-hmm.
but in his mind they weren't cheap. I think that he was very one-minded on this because he didn't access his clients to say, would you be willing to pay for this? Because it said that it would have cost us something like 20 to 25 cents per month per account that we access. So a Kate customer with 4 brokerage accounts might incur $1 per month in data costs. Well, maybe for one of those customers, that for them it was worth it. But in his mind, he felt that that was too big of an expense for him. So it still could have been a cheap way, but in his mind it wasn't.
Yeah.
And he just is like that, he had a bad experience, therefore he wasn't willing to take the chance with him.
Right.
He didn't like him, is what it seemed like.
Yep.
And we all know how it is. Once we form an opinion, sometimes it's hard to change.
Yeah,
That's true.
Let's see. I'm going to read through these other questions really quick. See if. Okay, so we talked about this a little bit, but assess Carpenter's decision to sell Cake's assets. Should he have done this sooner? Should he have given this subscription product more time to develop?
No, he should have done it earlier.
Yeah.
He should have had a subscription earlier.
Yeah, I agree.
So do you think he, not because he didn't have it earlier, do you think he should have sold earlier?
I think he should have because he
Possibly.
just kept trying and it wasn't working. but he already had built that huge data thing. So I think at the point where he knew, oh, we need to make changes, and he went into his board and his board didn't want to make changes, I think that's when he should have realized, I've built this huge thing. I can't adapt it to be what it needs to be profitable. Let's sell this piece of it.
Yeah. I agree with that.
I agree too. But instead, he just went and asked for more money.
Yeah, I definitely think he should have done that before that last round of money.
Yeah.
Funding. That was just, you know, my end point. I'm like, okay, we're done. Let's see.
Yeah, but if you put yourself in his shoes as someone who has this company, once again, it goes back to you want it to be successful. So I think that you just
keep trying.
You just, as long as you can until you just really can't. He did. He finally realized that he just couldn't do it anymore.
Mm-hmm.
And I think a part of it is not only the benefit for yourself, but for people that work with you, because you know you're putting people out of jobs. You're showing people that you failed. I mean, it's just not a good thing. So he could have made better decisions. He could have actually asked his board. I think Haley, you just said that he could have went and said, okay, or Becky, you just said, okay, it's not working. We need to just move on from this, but he didn't. And
well, I think he tried, but they weren't willing to change.
Right. Yeah. So he got rid of some people. I mean, he downsized a lot.
I think that was definitely a help.
It was, but then you think of the experts that he had, they probably cost just as much.
Yeah. They did say right at the end that they did get more accomplished with the 6 people they had or whatever, 7 people they had than the 25 they did.
But how much did those 7 employees or 6 employees cost them? Because they obviously were working a lot. They were experts in their field.
Maybe he should have just started with them to begin with.
Yep.
A more flexible, smaller group. Yeah.
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 So let's see. Do we have... Moving on. Was Cake a good entrepreneurial... I have problems with that word, sorry. Failure. Was Cake a good entrepreneur... That word. Failure for Steve Carpenter. What is your definition of a good failure?
I think it was a good failure for him because he learned a lot from that. I think that's a definition. If we can learn something from that and move forward and not make the same mistakes, then it's a good failure. If you start over again and make the same mistakes again, then you learn nothing.
Then if you keep on making the same mistakes over and over again, then it was not a good failure, and you probably ought to rethink your career path and probably go work for someone.
Yeah, but I think for him it was good. His reflection seemed that he had learned a lot to move forward from where he was.
Yeah, lessons learned.
Yeah, I agree.
So do you think that Silicon Valley will tolerate his failure and give him more money, give him another chance for his second venture?
I think it depends on what it is. But yeah, probably.
Well, it depends on the idea. That's true.
Yeah.
I put a big really with a question mark, because he says as long as you don't constantly lose money for the investors, which I guess they had some payback.
Yeah.
And then he did stick it through to the end. So it's not like he just abandoned ship.
Right.
I think those two things probably are.
I think that definitely does show that he's dedicated to a problem and just doesn't want to abandon something before he's, made sure he can go as far as he possibly can with it. He did at least semi know when to throw the towel in.
Well, and at least he did sell it. It's not like he just closed up shop and nothing, right? So
I think, had he just closed up shop, I think Silicon Valley would not have tolerated it near as much.
Yeah.
So let's see. Am I missing any questions here? Did I skip anything, guys?
No.
So I was talking to somebody else in our class, and they were somewhat struggling with the idea of how to go about this analysis. I wanted to go over that just a little bit to see that if anybody else had the same, questions as we both did.
I did at first, just because he told us those specific topic headings we need for every case analysis. And I thought, well, what's our hypothesis supposed to be about? There's so many different questions could be answering for our hypothesis. And so I honestly finally just picked one. Let me remember.
It actually stated a few hypotheses in the case itself.
I wonder if we were getting or not. So I decided that must be what the question per se was, and that's what we should. I based my hypothesis and the rest, the proof in action, on that.
Do you want to share your hypothesis?
Yeah, just kind of what we talked about, that it was not doomed from the beginning. The business model itself was promising, but needed a different approach to have a better outcome.
All right. And then what she was mostly talking to me about and asking me questions about was how to go about the questions tab or the questions heading in that. She says, because it was, I'll read what she said. Maybe. They wanted to know what we thought he learned from his past experiences with cake, or if he could have avoided them. How did you go about writing the questions heading in this?
I just kind of took those questions that it was the questions prepared for your group discussion by answering the following questions. I took those questions and just kind of made an essay out of the answers to those questions.
Okay. All right. So, shall we do a quick summary of?
Oh, yeah, here's the paper.
You got to talk so it goes over. Michelle,
Okay.
You have to talk.
What time?
36 minutes.
Thank you.
Oh, you got it? Okay.
Yeah.
Who wants to do a summary?
Oh,
I'm not very good at summaries, so.
Well, we would go back to the situation that Becky started with. I think is if we start looking from the beginning and summarize from the end that Carpenter had a great concept. I'm just summarizing here quickly. I didn't write it down. But he didn't think, I don't think he saw the whole picture. Mm-hmm. He always saw parts of the picture and put them in place. But even when they were in place, he still couldn't see the whole thing and what was the end result he wanted. I don't think he really knew what the end result was. I think he focused on good things, but it always seemed to put him behind on something else. So in summary, Carpenter could have made better business decisions and investing decisions, and maybe he would have been a little bit more successful. Should he have jumped and ship ahead of time? I think he was wise into seeing out as far as it could, and he made a good move in selling the company and his assets when he did. And in the end, he learned from his mistakes, and he's able to move forward from that. And therefore, he shouldn't make those same mistakes. Which is interesting because he claims that he won't, but sometimes we're creatures of habit. And so hopefully he's successful in his next venture. That's my summary.
That's a good summary. I like it.
That's great. Okay.
Nothing.
All
but
right.
anyone can add to it if they want.
Anybody else want to add to it?
No, you got into the kind of psychology of it, which is good for a summary.
Yeah. All right. Shall we move on to the next case, guys?
Yeah. Do we want to do a second recording like we did last week, or keep this one going, or what?
I've got one ready. It'll be like 2 seconds, and then I'll get out and in. All right, you guys.
Okay.
All right.
Sounds good.
Okay. See ya.
Okay, bye.